Welcome to the 1 to 1 Million podcast, your weekly crypto alpha for those who never quit. Today, we're going to be diving into the markets and specifically what's moving the markets this week. We're going to talk a little bit about the long-term trend for the market. So what's brought us here and what does that trend say as far as where we're headed next? We're going to talk a little bit about liquidity dynamics. So, internally in the US, like what are the liquidity dynamics? And externally, globally, what are the liquidity dynamics and what are we waiting on for those to improve? We're going to talk about tariffs and kind of how they're having a heavy impact on the market. In general, we're going to talk about like why it doesn't matter focusing on what crypto is doing right now. And really what you should be paying attention to is the wider macro picture, because that's what's, as I've been saying for the past couple weeks, that's what's driving the ship. That's what's in the driver's seat. Macro is in the driver's seat. That's what's dictating the market. We're going to dive into all those details and more. Let's get into it. Right now, Bitcoin's at 86,000, ETH's at 2,000, and we've been trending up for the week. And everyone's kind of wondering, is this the start of a new leg, a new chapter of the market where we're going to, finally kind of go back up to maybe $100,000 Bitcoin and maybe even tread higher? Or is this just like a mini relief rally where over the next coming weeks, we're going to actually dip even lower into the 60,000s or possibly even worse, and altcoins are going to bleed even more? Which is it? What direction are we heading? And to really assess that, we have to figure out what's moving the markets right now, like what's actually moving us up in the short term, and over the longer term, what's been causing us to bleed out. Over the short term, we've been moving up for a couple different reasons. I think I saw Michael Saylor MicroStrategy has been buying more Bitcoins. Maybe that has to do with it a little bit. I think just in general, we were kind of oversold. So the market is just having kind of like a natural retrace up. I've seen some things about maybe some comments from Trump where maybe he's seeming a little bit less intense on tariffs. So maybe that has a little bit to do with it. Or maybe it's people sobering up. So people realized, hey, they're being too bearish. They're freaking out a little bit too much. And so you have a little bit of buying back into the markets. It's kind of hard to tell over the short term what's actually causing, maybe this little reversion rally. And that's why it's a lot more important to look at what is the long-term kind of underlying fundamentals that's been pushing us lower. I've highlighted on a lot of the past pods that really it's come from, like we were up only. We were doing so good after that Trump rally, post-Trump, post the election. But we stopped basically. We're just skyrocketing up, and we stopped to the day on the day of the Fed meeting. So the day the Fed meeting came out, where we thought we were getting all these crazy cuts in 2025. The Fed was looking really dovish. They'd done that 50 basis point cut, and we were just thinking, man, we're getting so many cuts, and cuts are great because there's so much liquidity into the market. But then, we got a whole different Fed on that day in December. They were really hawkish. They seemed really worried. They revised down to just 2 cuts for 2025. And this freaked out the markets because the Fed seemed worried about tariffs and they seemed worried about inflation. So the markets became really worried about tariffs and really worried about inflation. But what you have to remember about the Fed is the Fed was not worried about inflation during 2020 or after COVID, 2021, whatever. During COVID era, they said it was transitory. Remember this, and they ended up cutting or hiking way too late. And now you have the Fed right now where they did this big 50 basis point cut, this huge cut, and everyone's like, why did they cut so much? And then now they're like, we're not cutting at all. And they're like, why they're not cutting at all? The Fed's just kind of all over the place. Okay, they're not always right. They're not always correct in their assessment, and they can flip on a dime. They can flip, like new data hits, and they can flip their stance really quick. So their sentiment or the way they're viewing things isn't really necessarily a good indicator as to where we're going or where we're not going. In general, right now, if you listen to a lot of the top macro experts, they're going to tell you that they don't know what's going to happen. And that's really that's the problem right there is like they don't know. The Fed doesn't know. Nobody knows what's going to happen. That's why the markets are selling off, that uncertainty of, oh, wow, we don't know how tariffs are going to affect the market. We don't know if inflation is going to come roaring back. We don't know, what some of these Trump policies around maybe deregulation or whatever are going to end up doing. In general, this whole approach from government cutting, waste and spending, all of this is just kind of people are trying to take a step back and are saying, we need to figure this out. We need to figure out what's actually happening here. And so they're pulling their money out of the markets and they're sidelining it, waiting for some clarity, waiting to kind of figure out what's going on here. So the focus right now is how do we resolve this uncertainty? How do we reach clarity in the markets? Because when we reach clarity in the markets, all that capital that came out of the markets will go back into the markets as long as that clarity is somewhat bullish and somewhat growth oriented. And so that's really the question you should be asking yourself is when will we get market clarity? And we have a couple catalysts coming up. Really, again, a lot of it comes down to tariffs and inflation. So future CPI prints are going to be really important kind of catalyst moments. We have next week, we have Liberation Day, is what Trump calls it, where we're going to have a bunch of reciprocal tariffs come into place. That'll certainly very likely bring volatility with it where, just because, again, people are, all this is kind of based around tariffs and inflation. And so just people's emotions are going to be really high, is the reciprocal tariffs going to go into place? Is he going to kick the can down the road? How are other countries going to respond? All these things are going to be like a little recipe. And depending on how it kind of comes out, it'll be bullish or bearish. That's why I say you can expect volatility, but I don't say like necessarily it'll be up or down. It's kind of hard to tell because there's so many weird factors that nobody can predict, exactly how those things are going to play out next week. But depending on how they play out, you're going to have a lot of volatility. What we want to see, this is what we want. We want the tariffs to just happen. We want to be done with this. Tariffs come into place. Ideally, it's like other countries like lower their tariffs or whatever, and it's not this huge big deal. So we're not worrying about inflation. I've talked about it before. I actually don't think the inflation piece of tariffs is actually going to be a big deal. Maybe you disagree with that. If you're on the left, you adamantly disagree with that. If you're on the right, you think that's totally true. That's what every survey is coming up. Like the people on the left are like, tariffs are going to cause all this inflation out of control. People on the right are like, actually, it's going to fix everything. So depending on what side of the aisle you're on. That's probably dependent on how you're feeling. Obviously, we want clarity. We just want to know what the truth is. And my belief is if you, again, look back at 2017, you can see exactly what tariffs did. Obviously, these tariffs this time around are actually a lot bigger. There's a lot more to it. That's true. We're going like over time. Like this is an overhaul of tariffs this time. And you have kind of two factors where consumers are a lot more price sensitive to rate hikes. So like when I say rate hikes, I mean pricing in goods increases. People understand inflation now and they're more concerned about it and they're less likely to buy those goods if the prices go up. While at the same time, you have manufacturers who are more likely to raise prices rather than, well, I guess we don't know. We don't know for sure. But it feels like they're more likely to take action rather than not because they've already lived through an inflation scare. And so they don't want to wait too long when it comes to raising those prices. And I think they'd rather preemptively raise the prices if they need to. And so it's a complicated dynamic. We don't really know exactly how this is going to impact things. My gut intuition is that it's not going to be a big deal. Even worst case scenario, even if it is a big deal, it's a one-time inflation increase, unlike the normal inflations like year over year, right? Every year you have an increase in inflation. This is a one-time thing. Happens once, then it's done. You don't have to worry about it ever again. So you could have the markets look through that and all kinds of things. Again, I don't think it's a big deal. But the markets just in general are fearful. They don't know. The markets are smart sometimes and the markets are stupid sometimes. And this is an example of like markets. To me, it's obvious like how this is going to end. But I guess to the markets, they want the clarity. I've gone really off track. The point is we want clarity. We want clarity. So we want these tariffs to just resolve. We want to stop talking and fearing tariffs. We just need to face the reality of tariffs. Whether you think that's good or bad, it doesn't matter. We just want to face the reality of tariffs because that is a certainty. It's just like with the election. It didn't matter red, blue, who won. We wanted the reality. I mean, it does matter. It does have second order effects. Sure. I'm not saying it doesn't. But what I'm saying is you had uncertainty before the election that freaked people out, caused a lot of pain. And then once we got certainty, it didn't matter who won. You would have gotten a rally. The size of that rally, the scope of that rally, how that played out after would have been different depending on the person. But you would have gotten a rally because you would have gone from uncertainty to certainty. In the same idea, we need to go from uncertainty to certainty around these tariffs and inflation. And so resolving this, that's what we want. We want to see the market resolve this, and that'll be really good for the market. So that's really the catalyst or the thing that we're waiting on. We did have a Fed meeting last week or the week before. I forget when it was, but I watched the whole thing. You had a lot of language from the Fed basically saying, "Hey, we're here to buy. If we have any weakness in the economy, we're here to cut rates and all that kind of stuff." So they're trying to kind of strengthen the economy through their words and just making everyone well aware that it's going to be okay, which is true. The Fed has so much room to cut. I don't think anyone should be worrying about a recession unless the Fed just takes way too long to act. They have so much room to cut. They could completely shut off QT. They slowed it down. They could completely shut that off. They could start QE. There's so many weapons the Fed has to fight inflation. It's not really a big deal. A lot of people are making a big deal though about the QT slowing down. I actually don't think it's cool. It's definitely cool, but it's not obviously it's not going to move the markets. It's just it's a step in the right direction, but that's really all it is. We also had this past week GameStop come out and say that they're going to be buying Bitcoin and holding on their balance sheet. They're becoming like a mini MicroStrategy. You're seeing a lot of companies kind of take this approach alongside, now we have the Bitcoin strategic reserve. You're more likely to see more countries start holding Bitcoin. When you really look at the crypto picture and the adoption piece of that, it's so insanely bullish. And we have all these sources of buying pressure and flows and liquidity. That's why I keep saying that the problem isn't crypto. The problem isn't your favorite altcoin. The problem right now is the underlying conditions, the wider macro picture. And if you take that a piece of the equation and turn it bullish, crypto would be skyrocketing right now. So that is all we really care about paying attention to. That's what's causing the market to move the directions it is. And to go all the way back to the original question, are we going to go higher or lower? In the short term, again, we don't know. That's really the hard piece is nobody can answer that for you. Higher, lower, short term, no idea. But we do know that once this uncertainty resolves to certainty, we will. That's when we'll have that kind of resolution event. So I guess if uncertainty resolved to a certainty of recession, then that would be very bearish, and then we would certainly go down. I don't think that's a problem at all, not even a little bit. I think, again, we have all the tools to handle that. And I think what is the by and far most likely outcome is our uncertainty resolve is when it resolves to certainty, we realize a lot of these fears were overblown, and that causes a pretty insane move to the upside. And I don't know exactly when that is, but if I had to bet, I would bet pretty heavily that by the second half of the year, we have a pretty insane rally in crypto, risk on assets in general, from this uncertainty resolving to certainty. But hopefully, ideally, it could happen even sooner. And right now, my favorite indicator to watch, my favorite macro indicator to watch is the dollar strength index. Dollar strength index, I think, is the key indicator to keep an eye on. I think it is the single most important thing that you could be watching right now is dollar strength, dollar weakness. We want a weak dollar. If you want to make money investing in crypto, you want to see that dollar get really, really weak. That's what we want. And this is an exact repeat of what we saw in 2017 with Trump, as we saw initial rise in the strong dollar, and then we saw that dollar really start to weaken around April. And that weakening of the dollar is what caused the bull market of 2017, which is by all measures was one of the most insane bull runs we've ever had. It wasn't the Fed cutting rates, because again, I've talked about the Fed was raising rates in 2017. It wasn't the Fed doing QE, because the Fed was doing QT in 2017. It was dollar strength weakening, because it's not just U.S. macro and liquidity that drives the crypto markets, but it's because crypto is global. It's global markets and liquidity that drive the crypto markets. So right now we have China who wants to do stimulus. We have Germany who wants to do a lot more spending and build out a military and stuff like that. In general, there's a lot of countries globally that they need a weaker dollar in order for them to kind of devalue their own currency and do the things that they need to be more fiscally irresponsible. Basically, if we're too fiscally responsible, if the U.S. is too fiscally responsible, we have a strong dollar. It makes a lot of capital come to us. And so all these other countries, they're like, hey, we need to be a little bit fiscally irresponsible. So they need us to also kind of be a little bit fiscally irresponsible so that we don't look so good compared to them, right? It's like everyone's camping and, you kind of, if everyone looks bad, it's okay. But if one person is I don't know, doing themselves up, wearing a suit or something, I don't maybe they make everyone else look a lot worse. That's a really bad example, but you kind of get the idea. That's not really, that's a really overly simplified example, but basically weaker dollar, really, really good for global liquidity. That's what we want to see. It's bad for inflation. So there's maybe my bear take would be a stronger dollar is better for inflation. A weaker dollar is bad for inflation. I don't really think it's going to have that big of an impact or be that big of a deal as far as things go. I think energy is really the key driver to watch for inflation. And I've talked about before that we have energy being pushed down by a couple different means. One, we have the OPEC Saudi deal, and then on the other front, we have the if Ukraine and Russia gets resolved, that's a huge unlock for energy prices, kind of pushing them even lower. So that doesn't really bother me as far as inflation. For me, I would be just insanely bullish to see dollar strength drop down to like low 90s would be just insane. Absolutely, it'd be a face-ripping bull run that we'd end up seeing if that were the case, especially if this ends up kind of corresponding with some of the Trump agenda Scott Bessent's laid out with this phase 2 of deregulating the credit, like smaller banks and different things like that, the privatized financial markets to allow more credit and money creation, because that's, again, more liquidity getting pumped into the markets. Then things they get out of control. So there's a non-zero chance that some of these things line up perfectly, and if they do, that's when you get that parabolic run up. So I would not discount that. I wouldn't be sitting on the sidelines and thinking, it's over. This has been a rough couple months. This is very normal in crypto. If you've been in crypto for a while, you have these down periods, you have these dips. But most importantly, if you look at the wider picture, currently everything's really bullish. Where if you're like late 2021, you're looking at the wider picture and you're like, okay, the Fed's more likely to hike rates, inflation's out of control. The writing was on the wall in late 2021 that we were going lower, and it was not going to be good because of the wider macro picture was bleak. And you have the exact opposite right now. Though you have uncertainty around certain aspects of what Trump's doing with the U.S., but the wider macro picture looks actually insanely bullish. The wider crypto picture looks insanely bullish, and that's my take. That's my take. Diving into the details is I think we're not there yet, and if we were there, it would be obvious, and the markets would already be pricing it in. But looking at the direction that we're headed, it looks really clear to me that things are going to get wildly bullish at some point, especially once this clarity kind of hits the markets. Because you got to also remember that the stock market going up creates an economic boom within itself. So stocks going up creates liquidity, creates an economic boom. Stocks going down, it kind of worsens the situation as far as liquidity and like the economy and stuff. So if these other catalysts that I've mentioned, dollar strength weakening, uncertainty turning to certainty, all that kind of stuff, pushes the stock market up, it becomes sort of like a self-fulfilling prophecy, or it starts to compound on itself, where it's like each thing kind of like pushes the other thing, and they start, it's a flywheel effect where it really pushes things up. Really quick, I have a pretty big announcement when it comes to the 1 to 1 Million podcast. Recently, I've been feeling like I'm too spread thin between the Obsidian Council, my main channel, and this podcast channel, my second podcast channel on YouTube, Spotify, etc. And this has kind of motivated me to try to restructure things in a way that makes sense, because it becomes very. I feel like I'm getting pulled all sorts of different directions. I need to streamline things, make them a little bit more synergistic, and kind of make it all work a little bit better for the process that I'm in. And so kind of with that, I've decided that I'm going to be taking these videos that you see on this podcast, that I guess if you're listening to on Spotify, that you listen to on this podcast, where it's like weekly market updates, weekly macro updates. I'm going to be taking that content and moving it into the Obsidian Council. That's going to be exclusive Obsidian Council only content moving forward. I know some people are probably not liking that. Kind of along with that, I'm going to be doing more content on my main channel. My main channel was always meant to be kind of a journal of my investing and what I'm up to and all that kind of stuff. And so I'm going to be expanding that, really focusing in on that, because my main channel has always been my passion, where I'm at. And this podcast, really, I started it to interview founders and kind of do this whole thing that I'm not doing as much of as I thought, because it was such a process of like, there was so much scheduling and all this kind of crazy stuff involved. And I really wanted just to focus on the markets and my investing and not all this like weird scheduling and stuff. So I've gone a whole different direction anyway, and I know people love it. I know you guys really love this content. But it just kind of makes sense with restructuring that it's more synergistic with what I'm doing to take this content, put it into the Obsidian Council, and use that as like a weekly update for the Obsidian Council. I can expand it, do a lot more with it there than I'm doing with it currently here. And then, focus on my main channel. I'm going to be doing 1 to 2 videos on my main channel a week. And so you're still going to be getting great content from there. It's still most of the kind of same stuff that you're getting on my main channel. It's just a little bit different in the way I structure it. My main channel is maybe more structured for kind of YouTube formatted content. And in this one, I definitely go a little bit more in depth, but you in general get the majority of the same content. As far as the actual podcast stream on Spotify, Apple, all that kind of stuff, that's going to still stick around. And I'm just going to be taking my YouTube content and kind of repurposing it on that stream. So the stream will still have content on it. It's going to be my YouTube content repurposed. It's just the main content. I think the main thing that people are used to with the podcast, as far as the weekly macro updates, those are going to be moving behind a paywall, which sounds stupid. And I get that. I understand people kind of hate that. And it really isn't motivated behind me. Like, I'm not going to get like any sort of boost or anything by doing that. It's motivated by, for one, I have this kind of because people pay me for the Obsidian Council, I feel this really deep need and like almost this kind of like weight that I really need to deliver. And I want to do like the best job possible, because I feel like there's people relying on me, and I've met a lot of these people. We do meetups every single year, so I know them. I know what they do. I know I've met their families, and I really just want to. I don't know. I want to make that the most valuable thing that I can, and I always have this kind of this pressure and this kind of like push and pull between like how can I do that while making sure I'm like really delivering with my other content. And this was a way I really felt like I could double down on what I'm doing with the podcast and expand it and make it really impactful for people in the Obsidian Council, and make sure that I'm just over delivering in that area. Again, I feel like almost an obligation because people are paying me for the Obsidian Council. It's like something people pay me for, and I don't want to be like one of these guys that like people pay me for this thing, and I'm not delivering like above and beyond delivering value. I want to deliver as much value as I can. I knew that would be a thing I would have to do once I started the Obsidian Council. Again, when I started the Obsidian Council, that was about my investing journey. It's about keeping myself accountable, really pushing myself, and I knew it would be hard, but it would push me to the next level as far as like research and all of that stuff, which you don't get that same level of accountability when you're doing it on your own. And so that's really the motivation, is the synergy and just not being able to juggle all these things at the same time, and it just making more sense and being more of an organized, clean fit when I do it this way. So that's a long spiel for all of this. But I hope that makes sense for people, and I hope you guys don't like get mad at me for that. Again, you're going to get most of the same content on my normal YouTube channel. It's just going to be it's not the long form that you're used to. Maybe on the podcast, but you get a lot of the same impact as far as like, it's not like I hide things from my main YouTube channel. I want to help people there as well. I still try to deliver the absolute best content that I possibly can on my main channel. It's just, this is too much doing this, the main channel and the OC, which all those things take time. And I just need to clean up shop a little bit with what I'm doing. Anyways, I am going to continue in the same format doing this podcast for the next couple weeks, especially because it's just kind of like a crazy couple weeks. I feel like there's a lot going on, and I'm not going to leave you guys. I'm not just going to like shut it off on a dime. So I will still keep posting for the next couple weeks. And if you're interested in joining the Obsidian Council, right now there is a wait list. There's a link in the description. You could go to that. I am opening it up next week on Monday at 11 a.m. Eastern time. So if you want to jump in, it's only 30 people that I'm opening it up to then, but I will open it up again when I publish my last episode of my podcast on in this format, publicly. So when I do that, I'll open it up again. So for the last group of people that want to jump in, and then it'll get closed down. So if you're wanting to join that, you want to keep listening to that, you can do it that way. If you don't want to do that or you can't afford that or whatever, just you can stick with my main channel content. It's still going to be really good stuff, and you're not going to have to worry about that. As always, none of this has been investment advice. None of this is me telling you to buy anything or do anything. You should always do your own research, and I'll see you guys next week.